Right, traders, welcome to another episode of K5 Trading. In this episode, we will analyze the gold for the coming weeks, and we will try to find key levels and the opportunities for the next week, how we can trade gold. Before we can continue in the gold, we provide regular updates on various commodities, stocks, and also the future indexes. If you like our videos, then please subscribe and press the bell icon so you can receive all our videos in the timely manners. Now let's start with the gold trading. This is our weekly time frame, and on the weekly time frame, you can see it's very clearly we are in a distribution mode. Okay, so since Monday, 3rd of August 2020, until now, we are on the kind of a sideway move, which is we call it a distribution. And if you look at here, that's our automatic rally. And after that automatic rally, we have a small kind of a spring here for a few weeks, which we can consider an accumulation on the lower time frame for this up move. Okay. So that's what we are actually looking right now. And currently, I can see that market is still in a sideway mode. Between this zone and this zone, this impulsive move, we are in a correction. And after that correction, now we are in a internal structure again. So the market is still going to play within this big range up here. We need to try to find out our key level on the weekly time frame, and then we will shift to the 4-hour and the daily time frame and try to find out how we can actually enter our trade setup. So let's start with this big move right up here. So first of all, the last break of the structure was here, and after that there was a break of the structure here. So we can see this break of the structure actually gone up, and now the market is failed to break this previous high, and it needs to come down for some reason, for whatever the structure is telling us. So let's start drawing our zone first on the weekly time frame. So that's our low and that's our high. So at the moment we are in the premium zone. For any move upside, we are looking for prices to come down in this area, and then we want to move upside. So let's start analyzing this impulsive move. We can see a fair value gap here, which I already filled. After that, we can see a kind of the drop base rally, but with this big candles, I'm a little bit suspicious like that. I'm not comfortable with this zone. So I will come down further down. This one is, you can say again, that's rally based rally. Again, this zone with the high wicks or big wicks up here, it's already mitigated, so no more consideration for this one. The last zone which I can see here is a rally base rally. This is the zone I'm actually looking, where I'm expecting market to give me a kind of a retracement. So let's mark this zone. This one is our weekly zone, and that is our demand zone. Sorry, demand zone. So we mark a bullish point of interest. All right, and now we can also see this is a weekly. So what does it mean by now? So on the weekly time frame, our expectation is market to come into this zone, and from this zone, it should give us some kind of reaction for the upside move. That's the only thing I can see at the moment on the weekly time frame. Where will be our target? Maybe our target will be just right up here where we have strong resistance, and after this market can come down once more before it's continue to the finish ending of this distribution and breaking this area right up here. Okay, but at this stage, I'm actually looking for a long trade if the price is coming into this zone. If the price is not coming into this zone and is further going higher, then I'm looking a supply zone where I'm expecting a reaction for the move downside. So let's mark a supply zone right up here at the top. So from this current price action, I can see this is the only zone I can find it, and that zone is almost kind of so that's our bearish. So this is the only zone I can find at the moment. I mean, you can mark this one, but this candle is already too high. So that's why I'm looking for the zones market. So these two zones, a demand zone and the supply zone, and we are expecting prices to come in either of the zone, give us an entry, and then we are on the towards the other zone. Now let's mark the liquidity on the weekly time frame. The number one liquidity, which I can see, this one, it's already taken. All those weeks, I consider them as a liquidity. They have been taken. The balance price action normally, and wherever you got a balanced price action, market seems to have some pending orders or some kind of the stop losses, which it will actually come and hit it. Okay, so this another one is forming right now. It's a break slightly, but it's a kind of a equal low, and market gone up. So I'm expecting prices to break this liquidity part as well. That's the weekly time frame. Now let's move into the 4 hour. I don't want to go to the daily time frame because my trading style, if I'm actually finding my trade setup on the weekly time frame, then I will find my entry in a 4 hour. If I'm looking my trade setup on the daily time frame, then I will look for my entry in a 1 hour. If I'm looking 4 hour, then 15 minutes, and 1 hour, then 5 minutes. So because I'm actually trying to find my trade setup into the weekly, so my best time frame for the entry is the 4 hour. So let's move to the 4 hour. All right, so we are in a 4 hour time frame, and if I can squeeze a little bit pricing, so you can see where our zones are. And did you notice something? That's currently we are near the supply zone. So I'm expecting tomorrow when the market will come back, we kind of looking for prices to hit in the supply zone. And we need to find some other areas of the interest. So this is another one right up here, and the top one up here as well. You can see this is kind of a break at the equal high. So market will break this one and enter into the supply zone. How do we want to trade this one? It's very, very simple. All we need to do, we need to wait for prices to go in our zone. This is our zone, okay? So if the market move inside, we will have some kind of 1 to 3 confirmation, or the second zone or second impulsive move. This is where we will find our entry point, because that's WM pattern at the top. That's what we are looking for our entry. Okay, so immediate price action, what is telling us, that's on the 4 hour time frame, what we are looking here. The immediate price action is telling us that market actually has taken out this zone up here. And at the moment, we should expect, if it is in this zone, then a kind of the WM pattern here for this, the fair value gap, right? So that's our short-term trading opportunity right here. Let me draw these zones, which has been taken out. That's the one I'm talking. Okay. You can see this prices actually went up, come down. So now this is area I'm expecting another move upside, and that move upside will actually give me some kind of entry. Let me mark this is a bearish point of interest. Yeah, so all I'm looking, price is to come back inside of this big candle, this red candle, somewhere 50% or so, and then there I can find another zone where I can get an entry point. So if what I mean by that, let me just mark this area 1 minute. So, yeah. Okay. Right up here, I am looking for a zone where the prices will hit, and that will be my entry. How do I find my zone in this one? Because this is a 4 hour time frame. And so I need to go into the 15 minutes time frame and try to find my zone here before my entry to the short side for my short entry. Okay, and there you go. You already got some price action right up here. this big candle up here is already cover up. This is also cover up. This is also cover up. So I can expect this particular zone right up here for the entry. So my entry should be in this big move around somewhere this area. Okay, so that will be the zone inside of a zone, and that will be my short entry. Where will be my target? My target won't be anything, just somewhere around here or this area, because this is a liquidity. This is another liquidity which will be taken out. Okay, so I want to keep it simple. I don't want to make it too complicated. So 15 minutes time frame, guys, look for the price coming around 1948. And if it's come around 1948, you will find a reaction which will give you a short entry right up to the 1936, or a little bit below this one. It's a good move. It's a wonderful move. And if you can catch this one next week, that will be your day. That will be your week, and your week is completed and done it, dusted. So that's all I got for you this week, guys, for the gold. So stay tuned and keep an eye for the next videos on the pound and the Aussie. Happy trading. Thank you.